Good morning, ladies and gentlemen. This is Butch Shorak, Options University. Monday, April 1st, 2013, as we bring in the new quarter in a new earnings season and kick out the first quarter of 2013. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Well, exactly what did the market do during the last week? Let's take a look. As we closed out the month, look at the Dow up 0.5%. We look at the NASDAQ up 0.7%. We look at the S&P 500 up 0.8%. We look at the Russell 2000 up 0.6%. If you don't like that, how about what we're looking at for the entire year? Look at this. The Dow up 11% for the year. We look at the NASDAQ up 8.2% per year. We look at the S&P up double digits, up 10% per year. NASDAQ is the only one that's declining for the entire year as far as not being in double digits. Look at the Russell 2000, leading all of them up 12% per year. Can you say that we've been in a bullish market? Yes, you can say we've been in the bullish market. April ends the big 6 months of the year. That's October through April. And at the end of April, we will see ourselves go into the worst 6 months of the year, which carry through till October. So have we had a run? Yes, we have. Can we continue at this present rate of this double digit quarter after quarter after quarter? Of course, we're not going to see that. Will we have a pullback? Absolutely. Are we seeing anything in our indicators that tell us that it's coming intimately? No, we actually don't see that. If we look at the first quarter, it closed out with a bang after we got through the little Cyprus problem and the little European problem. Are those problems still brewing in the distance for us? Of course they are. But as long as we got QE3 bouncing up the market, and we got consumer sentiment and people spending money, we are in a bullish market. Hang in there for another month. It certainly could last that length of time. What kind of economic announcements did we have last week? Well, we had a few that were not quite at what we expected. The labor numbers that we had last week on Thursday didn't quite give us everything we were looking for as far as jobless claims. And as we look at the first week in April, we've got more economic announcements coming, giving us some kind of an indication of what's coming for the overall market. Looking at the PMI Manufacturing Index Monday morning, looking at ISM at 10 o'clock, construction spending at 10 o'clock, we got a week filled with things that could move the market, at least give us some kind of indication on what's coming as we look at the rest of the year. Factory orders we see coming out on Tuesday. Looking at Wednesday, we look at the monthly report, the ADP employment report, ISM non-manufacturing index coming out on Wednesday at 10 o'clock. Looking at Thursday, we have our ever-present Thursday morning weekly jobless claims, which we disappointed with last week. And then on Friday, looking at the monthly, what are those unemployment numbers for the month of March coming out on Friday, April 15th. International trade and consumer credit coming out at 3 o'clock, which will not move the market quite as much as some of these other indicators that we're currently looking at. Looking at the SPX, we found out that we had a little bit of a breakout there on Friday. We are definitely in an uptrend. That's the trend we're in, and it is our friend until we end. Are we headed for bigger numbers? 1576 all-time high, just sitting right above us on the SPX. And so you see that we are continuing in that uptrend. As for the last week, we got higher highs, higher lows. We ended since early March. We basically were in a consolidation level. And what we're doing as we go into April, we'll see ourselves break up a little bit higher. Dow broke out early in the month and showed us that it could go to all-time highs. S&P is going to follow next. That is basically a pretty fair prediction as to what we're going to see. Looking at the week, we see that we played with this area most of the month where we were in this trading range that went from, let's see, right about here, and right about there. And we had our breakout on Friday, which kind of surprised me. I thought it would wait till next week to do it, but you see we broke it out. Have not quite hit that all-time number, but we're certainly approaching that. Quite a week. As Monday we went higher, Monday, Tuesday, Wednesday, Thursday, and then Friday, the last bit of a breakout. Albeit on a low volume, this is not a power move up, but it certainly has been a consistent move up. Looking at the Dow, we see that back in the Dow, right back in this area here. Dow went to all-time highs, had 8 or 9 days in a row where it got new highs and then consolidated, gone absolutely no place since then. The Dow will have a little bit of a tendency to follow the overall market. Looking at the S&P, as we climb up a little bit higher, we can see little higher numbers out of the Dow, but it's kind of stymied itself as it got to those new numbers. And looking at the NASDAQ, which has been our laggard, part of the lag has had to do with Applenomics, as Apple has pulled back 25-30% from its all-time highs, but the NASDAQ still, the only one not in double digits, consolidated with the rest of the market here during March. Didn't have much of a breakout on Friday, but we can expect higher highs as we're coming into earnings for Apple as we go into April, and many times Apple will have a bit of a run going into earnings. Russell 2000, the all-time leader as far as so far this year, did nothing the last week, just went sideways. Have not had the breakout in the Russell 2000 yet, but had a quite of a good first quarter as we started that first quarter way down here, and we ended up way up there. A nice move of 70 or 80 points out of the Russell 2000. I believe the number was up 12%. What kind of fear have we had in the market looking at this? Well, our all-time favorite indicator for looking at that is the VIX, and we see that the VIX has been trading in long, low numbers. Very little movement out of the VIX above that 15 level. A little bit there back in February, but certainly not seeing much, as the VIX tells us there's not a lot of fear sitting there, and we're not seeing any of our other indicators either. Is it getting a little high up here? Yeah, the air is getting a little thin up here, but remember, we're still tying in the best 6 quarters of the year. It is always interesting what happens in May in the overall market. Bond market, what's it doing? Well, the bond market is definitely in a downtrend, as we see that the 200 is above the 50, which is above the 30. Saw a little bit of a boost out of the bond market this last week, but nothing showing that it's heading any higher. Be interesting to see where bonds go when we finally do get our pullback in the overall market. Looking at the financials, we see that the market, as the financials went up, so did the market, and vice versa. Nice healthy move out of the financials. Looking at the ETF XLF, and certainly has been money to make in that during this first quarter of 2013. Notice though, we didn't get a breakout in the XLF as we did in the SPX during the last week. Looking at oil, well, we see gas basically up there chasing big numbers, and look at the oil. Nice little uptrend from that low that it reached back here at the beginning of March, and now you see we're climbing back up. That ETF gave us a buy signal, consolidated a bit, and then broke out this week into new highs, headed for the highs of the year. And we'll probably get there before we get that overhead resistance. Next, let's take a look at gold. That secure amount of money where the fear money goes. See, it's not doing all that much at this point. Gold sitting down here, kind of consolidating in this area, not showing us any great strength whatsoever. You can expect that we might see gold move up as the market pulls back, and we start looking for this in May. So kind of watch gold and realize that it can go the opposite way of the overall market. Looking at the last week, what kind of volume did we have? Well, we'll look at our favorite ETF for volume on the overall market. We'll take a look at the spider, and when we look at the spider, what we'll see is that, let's go back one page and click on that, and we'll see that during the last week, not a whole lot of volume. We did get our breakout on Friday on the SPY, but notice it was done at basically right around average volume. Certainly no volume spike as we see the SPY break out. All right, so for those of you that are not gold members, it's a pleasure having you here. For those of you that are gold members, stick around. We'll look at our stocks to watch, see how they did during the last week. And for those of you that would like to see more free videos from Options University, go to www.optionsuniversity.com/free gold. With that thought, ladies and gentlemen, thank you for being here. This is Butch Shorak, Options University, Monday, April 1st, 2013, April Fool's Day, and don't let anybody get you with too big of a joke on this day. Thank you.